Dirty dealings, corporate battles, consumer woes. This is Evening 5. After 2 years of being suspended, the Aerotrain at the Kuala Lumpur International Airport is now targeted to resume operations by the second quarter of 2025, subject to the testing and commissioning progress. According to Malaysia Airport Holdings Managing Director Datuk Muhammad Izanikani, all tests should be completed by April, adding that the group is confident that the Aerotrain will be operational by the second quarter. The 456 million project has faced several delays, with the previous targeted operational date being January 31st this year. Izanikani said that the timeline given then was overambitious. He also said that adherence to technical requirements can sometimes lead to delays in certain processes. The 3-year Aerotrain replacement project initially had 2 deadlines: July 2024 for the first Aerotrain to be operational, followed by March 2025 for full completion, with both Aerotrain services spanning about 1.5 kilometres coming online. The Aerotrain project has reached 85% completion and is now in the testing and commissioning stage. It will undergo 80 tests, including dynamic tests, system acceptance tests and interface tests, and system integration tests. The new trains will also increase their passenger capacity to 270 per trip compared to 230 previously. Izanikani also clarified that MAHB's privatisation will not impact the management of the Aerotrains. The Aerotrain at KLIA has been suspended since March 2023. A consortium led by Khazanah Nasional that is intending to take Malaysian Airports Holdings private has received valid acceptances of 1.548 billion shares, or 92.82% of the total number of issued shares. The latest acceptance level was at 5 p.m. on January 24th, MAHB said in a BOS filing. Notably, the current acceptance level is now higher than the revised acceptance conditions of at least 85% made by the consortium Gateway Development Alliance. Despite surpassing the acceptance level, GDA will only determine if the offer has become unconditional on January 28th after 5 p.m, said M Investment Bank on behalf of GDA. The offer will remain open for acceptance until 5 p.m. on February 4th. The consortium, which also includes the Employees Provident Fund, the Abu Dhabi Investment Authority and Global Infrastructure Partners, reiterated that they do not plan to keep MAHB listed after the takeover offer is completed. Malaysian Resources Corp is partnering with Melaka Corp to develop a hospital on a parcel of land in Melaka Tengah that will have an estimated gross development cost of 520 million ringgit. MRCB said its wholly owned unit, MRCB Land, has entered into an agreement with Melaka Corp subsidiary PM Multilink to form a JV company to undertake the project, according to the Property and Infrastructure Group's BOS filing on Friday. The company, named Majestic Quest, will be formed on a 70-30 basis. The project, which is located in the Bukit Baru district in Malacca, will later be leased to Putra Specialist Hospital, Malacca. Phase 1 of the project comprises multidisciplinary facilities such as cardiac and orthopedic services, 300 hospital beds, as well as 11 consultant suites. MRCB and Melaka Corp in a joint statement said that future phases will introduce complementary facilities such as a hotel, retail and commercial areas, a rehabilitation and wellness centre, an aged care centre, hostels and service residential units. Melaka Corp Chairman Datuk Sri A.B. Rauf said the Putra Specialist Hospital represents a significant milestone in Malacca's journey to become a premier medical tourism and healthcare destination. Meanwhile, MRCB Group MD Datuk Imran Salim said the JV reflects the group's commitment to address the state's growing healthcare needs while contributing to its economic growth and development. A joint venture between Gamuda and Ferrovial has inked an early contractor involvement agreement with Capricornia Energy Hub for a hydroelectric storage project in Queensland, Australia. CEH is backed by Copenhagen Infrastructure Partners, one of the world's largest clean energy investors. Under the 5-month ECI deal, whose contract value was not disclosed, Gamuda said that its JV will develop an engineering, procurement and construction framework for delivering the project, named Capricornia Pumped Hydro hydroelectric storage. Located about 80 kilometers west of Mackay, the project is poised to play a pivotal role in bolstering Queensland renewable energy ambitions, Gamuda said, and will supply affordable and reliable power to about 900,000 homes in the state. Gamuda Australia CEO Iwan Yee says that this landmark project underscores its commitment to Queensland RE future while expanding its presence across Australia. Recently, Gamuda's shares have fallen over 12% since the US government's announcement of new restrictions on artificial intelligence chip exports. The counter closed 10 cent or 2.33% lower at 4 ringgit 19 on Friday, giving it a market capitalization of 24.43 billion ringgit. Scientex is acquiring a plot of land measuring 528.49 acres located in Paya Rumput, Melaka from Genting Plantations for a total of 333.8 million cash. Scientex said the acquisition will boost its existing land bank, which aligns with the company's goal to build more affordable homes according to its filing. The group is targeting to complete 50,000 affordable homes nationwide by 2028. Scientex said that the proposed acquisitions are expected to enhance its future earnings when the proposed development comes on stream. It is expected to be completed in the second half of 2025. Meanwhile, Genp said the land disposal will generate a one-off gain of about 284.92 million ringgit. The group acquired the land in April 1981 for an initial investment cost of 2.09 million ringgit. The plantation group, in which Genting owns a 55.39% stake, expects no significant impact on the group's income stream from its plantation activities, as the planted land is less than 1%.